It's a fact of life that many Australians will never own that home with a white picket fence. For them, renting is the only option. And some hard-working lucky others will own 2 or more properties. Fair Trading has helpful guidelines to protect the rights of both renters and landlords.
Buying and selling investment properties is a big part of the real estate market. I mean, sure, everybody has to live somewhere, but not everybody will live in their own home. So that's why it's very important that people can invest with confidence in the residential property market. There are pitfalls involved in investing in the property market, and mum and dad investors particularly need to be aware of some of these before they dive in. There's 2 ways an investor can manage the property. They can either do it themselves or they can get a professional in to look after the property for them. But if they were going to do it themselves, they should disclose to potential tenants important things about the property that they're about to rent. It might be that the property is flood prone. The other thing is that investors need to then sign their tenants up using a standard residential tenancy agreement and also do a condition report. These vary from state to state, so they need to talk to the local fair trading agency. If they accept a rental bond, that will need to be lodged with the local authority. And if they accept rent in cash or cheque, they need to write receipts and keep rent records in case there's disputes about rent later on. If a tenant is late paying rent, don't harass them. There could be any number of reasons why they're late. They might simply have forgotten. A nice gentle reminder is a good start. After 14 days being late, you can issue them with a notice of termination, and you can lodge an application at the tribunal to seek termination of the tenancy agreement and repossession of the property. If the tenant does pay the rent late, you do have to accept that rent. Rent increases need to be reasonable, and landlords should be mindful of the local market, CPI, and recent improvements to the property that might affect their ability to charge more rent. During the fixed term of an agreement, now that's the period between the start and end dates on the agreement, to have the rent increase, it needs to be specified in the agreement, and then they need to issue the tenant with a 60-day notice. After the fixed term period finishes though, all they need to do is issue the tenant with a notice 60 days before the rent's to go up, telling the tenant how much the rent will be. If a landlord increases the rent too much, they'll find that the tenant disputes the rent increase at the tribunal. It's really up to the tribunal member to determine what's a reasonable level of rent. Landlords want to be able to keep an eye on the rental property that they own. Now they can do this by inspecting the property up to 4 times per year. They just need to issue the tenant with a written notice 7 days before they want to go into the property. It's of course the tenant's responsibility to maintain the home day to day, and if there is any damage, the tenant needs to report it to the landlord straight away so that landlord can do something about it. If a landlord wants their property back from a tenant, there's a few things they need to keep in mind. If the tenant doesn't leave the property by the date on the notice of termination, the landlord can't just go into the property and turf them out. There is a process that needs to be followed. They need an order from the tribunal terminating the tenancy agreement, and they need a warrant for the sheriff to actually enforce the termination and the eviction of the tenant. There's big penalties that apply if a landlord goes into the property and evicts the tenant themselves. There are other things that investors will have to keep in mind when signing a tenant up. Now, for the full list of their obligations, they can go to our website and have a look, or ring one of our fair trading centres. For investors that don't feel comfortable managing their own property, there's always the option of finding a trained and licensed real estate agent to do it for them. The important thing to do is do a licence check with Fair Trading first. Negotiate with the real estate agent to get a good price for the level of service that you want that real estate agent to provide you. And then when you've agreed on all this, detail it all in a written agency agreement signed by both parties so that if there's a dispute down the track, you can rely on that agreement.
As a managing agent for investors, we ensure that both landlords and tenants are fully informed of their requirements under the new Residential Tenancies Act. And with our management, our properties are marketed effectively, our tenants are well qualified, our properties are inspected often, and our accounting is prompt. And I think that the transparency of all the transaction and good communication is a huge element of managing a property well for both investors and for tenants.
When a landlord appoints an agent will collect the rent, they'll undertake inspections, they'll organise repairs of the property, and they'll often pay regular bills like council rates if asked to do so. If the landlord's not happy with the service that their real estate agent's providing, firstly they should talk to them and make some notes, keep track of what's been going on. If they need to terminate, they need to be mindful that a lot of agency agreements have a notice period that needs to be served out. If things have soured with your agent that badly, you can always come and talk to Fair Trading. We can help resolve disputes.